We're going to talk about a property in there called Arbor Trails. So what I'm going to have Janine do is just tell us a little bit about your background before you came to Lifestyles. Now, your husband can't be here tonight, Andre.
Yeah.
He's home with kids, right? Babysitting,
Yeah.
right? So the two kids
yes,
are at the
three
house
kids,
with
three kids.
3 kids with Andre.
9,
okay.
7, and 4. Yes, Andre really wanted to be here tonight, but we do have a great babysitter. Unfortunately, she was unavailable.
So what were the two of you doing? But
so
before?
Andre was in IT. He worked for Apple. Before that, he was in hotel management. And I was a dyslexia therapist, and I worked for an independent school. I really actually loved my career, but it wasn't, it was, there were,
Wasn't
yeah,
exciting.
it didn't pay a whole lot. and yeah, we just, that's kind of where we were at.
What I really like about your story is your mom and dad are here tonight.
Mm-hmm.
Bob and Diane DeLong
Yep.
were there, and you're actually legacy. You've actually had an opportunity to work in the business, take advantage of what they've learned, and contribute to some of their projects.
Yeah, we were really fortunate. When my dad retired, he had joined Lifestyles, and so we got to see what they were doing and learned about it. We would see them a lot and see, a lot of passive income coming in, and we were really excited about it, and that's kind of where it all started.
So tell us a little bit, again, I guess we have talked about why you joined Lifestyles, and then being in the business and working with the family. And now you've taken it to the next level and went out and bought your first property.
Yes, we did.
And so let's talk a little bit about Arbor Trails. It's in Round Rock, Texas.
It's in Round Rock, yeah.
It's your first lead investment
Yes.
that you put together. Tell us a little bit about the property, size, capital that you raised.
Sure. It's 100 units. It was built in the 80s, so it has pitched roofs, really great bones, really great property. The cash out of pocket was $3.83 million. We bought it for $10.2. We closed at the end of September last year, September 2020, and we got a really great loan on it. Really, really great loan.
So let me ask you a question about that $3.8 million. $3.8 million is a lot of money. Do you think this was Janine that brought in $3.8 million? No, you had several. How many investors did you bring into this property?
60.
60. And so what was the minimal investment that you had in this property?
25.
So think about this for a moment. $3.8 million made up of 60 investors, and the smallest investment was $25,000. So think about this. Think of each of you that if you were in $25,000 investor, what that return might look like as you listen to this presentation, and what that would look like 3 years from now. So
one more thing, Doug, make sure we cover that, because remember, we're nationwide.
Yeah.
So the people watching from out of state, is this just people from Austin invested?
So that's a good point. This investment, did you have any people invest with IRAs?
I had a couple people invest with IRAs, and then I had quite a few. I had a handful of investors from California.
Good, and that's my point. What I
Yeah.
want you to take away, this capital raise of $3.8 million is not exclusive here to Central Texas members or Dallas or Houston. This is national. If you live in Hawaii, or if you're in Georgia, or if you're in the Midwest, if you have a relationship with any lead investor, you have the opportunity to invest and be in one of these deals that have been put together. So I want to make sure we...
And one more factor I want to bring in here. So we have people from all across America investing, even people from Kentucky with no teeth, doesn't matter. Janine,
I don't have any of those.
Of all those 60 people, how many physically came to the property and looked at it? I just want to prove this point to y'all too. How many actually went there?
Well, I had a handful come for feasibility at the beginning when we were under contract.
Maybe 10 or 20?
Yeah, it was probably 10.
So
Yeah.
that's a factor too.
Yeah, and you as a passive investor have no responsibility other than receiving your quarterly payouts that you have. You have no responsibility. You're not running the property. You have no operational requirements of you. You get monthly reports on the P&Ls. You get narratives that talk about what's taken place. You as a passive investor have no obligation to perform any type of duties or anything at the property. Isn't that the nice part of being a passive investor? Are any of your passive investors here tonight other than Bob and Diane?
Yes,
Oh, yes,
right
okay,
over
we've got
there.
some. Okay, very good.
I have quite a few
All
that
right,
I
and
think
I'm
are
sure
probably
there's
online.
several online, or
Yes.
all online, I'm sure.
There's quite a few
are
online, I
here-
think.
here with you.
You have 60 investors and only 2 show up in the room.
Yeah, I know. Can you believe
You would
that?
think more people would love you.
I did get some phone calls earlier. I'm so sorry I can't make it to case study.
So, good. That's a little bit about the property. Tell us a little bit about what the income, expenses, just overall what it looks like and how it's been performing.
Yeah, it's been performing really well. The income is about $109,000 per month. Expenses are less than half of that at about $50,000 per month. Monthly cash flow is around $29,000. The NOI is $58,000. The cash on
The NOI, just so you know, it's a net operating income. David Fisher will teach that and discuss it. What I want you to take away from this is look at the cash on cash returns. How long have you had this property now?
for just over a year.
A little over a year, and already within that little over a year have distributed over $200,000 back to their passives. How neat is that? In a moment, we'll talk about the overall value of the property. What'd you pay for it? Remind us again.
10.2.
$10.2 million. Owning it a little over a year, the property's already worth $12.6 million. Keep in mind, single family is brick and mortar. It's what the market is willing to pay for the houses. In multifamily, it's a business. It's about increasing your overall income, and the value of your property goes up. That's the nice part, what Janine has done to this property. She's been able to raise rents. She's been able to drive other type of incomes. She's made a better product for residents to live, all creating more value and equity for you and your passive investors. So we'll talk about a little bit more about that in a little bit. Some before and after pictures. Let's talk about what was important to you, some of the things you did. The property, you renamed it, right?
Yeah, we immediately renamed it. It did not have a positive online presence. So day one, we had a new sign up. We changed it from Bowman's Walk to Arbor Trails. This picture up at the top left is a very important picture to me. I know it's just of trash, but this is something that was a massive problem. From day one, there was trash everywhere. The trash company never came and picked it up, and it was always contaminated, and there were always problems. And imagine living in a home, in an apartment community, and there's trash everywhere. How do you feel? Probably not that great. So that was day one. That was one of the number one things that we would talk about.
How'd you solve it?
Well, we hired a new trash company. We moved the dumpsters. The dumpsters were right by there are two entrances into
So everybody
the parking
saw
lot.
it coming on.
Everybody saw it. They
So
were
it was an
dumping all this
amenity. It was
stuff.
like Oscar's house.
Exactly. It was crazy. So we moved them. So there were two locations, and it's little things like that that can make a huge difference for residents. And when residents are happy, they renew. And when they renew, you make more money. And
It's all about tenant retention, isn't it?
really is.
You
It
know what I
really
like
is.
about, what's interesting about these two photos, Bowman's Walk? Bowman's Walk. Where the hell is the phone number? How do you call? How do you call in and check for information?
Yep,
They didn't want anybody to call them.
I know.
I found that interesting. That's a nice sign. That's really
you.
rebranding it looks
Thank you.
looks good. Here's some more. What do we have going
so
on here?
we repainted, made some repairs. There were some siding repairs that needed to be done. So the before was just kind of this brown trim with the tan, and then we painted it gray and did the red on the balconies. I don't know if you can, you can tell from these pictures. We did a bunch of landscaping, put in some nice rock, just cleaned it up, trimmed the trees, things like that.
turning units and doing rehab repairs on interiors is important. Yet your property has to show well cosmetically. That's very, very important. And so you took the steps to say, let's improve our color scheme, let's do make some investments on landscaping, and having that overall appeal exterior. And that is important, and obviously by these pictures that you did do that. So.
Yeah.
And this is just some more you've got here. It looks like you put in outdoor grill.
Yeah, we put in a nice outdoor grill. We you probably can't see from the pictures, but we replastered the pool. Put in some nice furniture. We put in this pergola here. And we also put these little grills on the bottom right. This has made a big difference too, because these are kind of smaller buildings and there's a lot of green space outside of each building.
Yep.
So we just added a picnic table and a grill outside. And it was funny because the weekend after we were finished with that project, and we did that in a number of areas around, there's 13 buildings. So we did it pretty much everywhere we could. And I had gone over there. I think I wanted some pictures for my investor report that I'd sent out, that I was going to send out. And there, 3 of the grills were being used, and residents were out there using them on the picnic table, and I just felt like...
Well, it's a great amenity, and that's important.
It's not only that, but for insurance reasons. If you don't have grills out there, where are the grills going to be? On those porches out there, and then it's a fire hazard for insurance.
So that was a great investment, and all about tenant retention. Good.
These are some pictures from the interior. A huge, one thing that has allowed us to really raise the rents at this property is 48 of the 100 units were studios. And if you can see in this picture, so the left picture is the bathroom, and then the right one is like this interior kind of window that allowed it to be a studio, and there was no door on that door frame. So we just wall it off, put a door on, and it's a 1-bedroom, and it's a completely different product.
So you were able to market it differently.
Yes.
By doing it instead of a studio. You took it to the 1-bedroom, which actually allowed you to market it at higher rates.
Right. Yeah.
So,
and it makes it more attractive.
So when they were studios, where was your rent starting off, and where is it now?
$850. It was at $850, and right now we just leased one for $11.59.
That's a 20-some% increase. How about that?
We had a meeting
all helping the total net operating income or the overall value of the property. This is what we're talking about, how we add value in multifamily and have those higher equity captures when we sell. That was a great idea. Was that your idea or your mom and dad's idea?
It was funny. It was mine. I'll take the credit.
I figured that.
It was. There was one unit I walked that had been walled off, and it didn't have a door on it. And I was like, if you just put a door on this thing, it would be a 1-bedroom. So then we were like, we should put a door on it. And we did, and then, let's ask $50 more. And then it just kept going up.
And kept doing it, absolutely.
Yeah.
Well, are they truly passive investors, or do they try to interrupt and do things their way?
Oh, no, we're partners for sure.
Okay,
yes.
all right.
Yes.
I do that. Okay. Let's talk a little bit about the property, what the cash flow looks like, and where you're projected in year 3. And if you don't mind, I'll take these next 2, and then you can elaborate on them.
Sure.
But the first year, they were just getting started. A lot of capital going back into the property, turning units, doing all that. So the first year, there was just right at a 6% rate of return. As you progress, now we're in year 2, 9%. So $220-some thousand, a bit, $21,000 paid out in year 3. And by the time you get to year 3, you're projected at 11%. And all that is because of your income continues to go, and you've been able to maintain your operating expenses, which has contributed to your overall NOI. Very good. Here's one that I want to talk to you. We're in year 2. We just started year 2 on this property. let's say that as we get to year 3, that Janine says, you know what, market's good, we're going to sell this property. I'm going to communicate with all my investors. We're going to take a vote on whether this is the right thing to do. So let's look ahead at year 3 and say, what might that look like? Well, the projected NOI, net operating income, by the time they get to year 3, increasing rents that she's talking about, $850, $1,100, still going up, is projected to be $780,000. Now, when that net operating income hits $780,000, the property value is $16.4 million off of a $10.2 million purchase. Pretty good, right? Might be worth considering to sell. So what happens after that? Who needs to get paid off? Well, there's debt on the property, right? You got to pay your lender back. The lender gets paid back. Who gets paid next? Well, we talked about the capital raise, 60 investors, $3.8 million. They have to get their money back, right? They're paid off. Then, if you add back in the cash on cash that they were paid over 3 years, $991,000, you have a total equity and cash over a 3-year period of close to $6 million. You do the math on that. That's a 156% return over your original investment. So remember I told you, you $25,000 investors out there? Tack on another 156% to that. That's quite a story. That's amazing. And I personally believe, based on what's going on with the property now, Janine, that's a very realistic, and I would say conservative, based on what we're seeing in the Round Rock area and the type of investment and how you're running the property. Give her a hand for that. That's a really good story. You want to talk about a little bit about
Sure.
how you got all this stuff done
Yeah.
and what
Well,
you're
I
doing?
would never be standing up here without lifestyles, that's for sure. I mean, there is no way, and you know, if my parents hadn't paved the way, I would never have taken a jump. Maybe it would have taken longer, maybe, but yeah, that's a huge thing. We use the best product, best price model. We fix everything up front. All of our rehab at the beginning is done right away. We always want residents to see, hey, there's a change happening, and it's really positive.
I want to comment on that a moment. She had brought in $700,000 for capital improvements. And when you acquire a property, you're right. You want to see residents seeing the improvements. So you took action in the first year. We saw all the exterior improvements that were done. We don't turn units until somebody moves out, but she's been able to get these higher rents from going in and making the changes on the before and after, turning efficiencies into 1-bedrooms. All that you've contributed to the property in a short period of time. Staffing is important. I'm sure you've got a great staff.
We do. We have a great staff, a really great staff. We have strong community policies. We are really strict on our screening. We hold to it. We've improved the amenities, which everyone likes to use. The interior upgrades, you know, you can do a lot with a modest interior upgrade. We're not putting granite countertops in, but we put a nice framed mirror, nice lighting, nice fixtures, nice flooring. You know, we only replace the flooring, granted, when it needs to be replaced because it already had pretty nice
That's a very good point. You know, we'll go out and we'll do comps. We'll look at what our competing properties are. You're a Class B property. We're not out looking at A-class 2000, 2010 builds as our competitors, because they're not.
Yep.
We want to look at the properties that we truly compete with in the vintage and B-class early 80s. That's our competition. And we always want to be one step ahead so we can get the best rates and attract the right residents. So doing those comps has allowed you to be able to keep good resident retention and get
Yep.
the higher rates.
Yep.
Yeah, and guys, remember, some of the things she does not get you more rents. Just putting in prettier landscaping is not going to get you a higher rent. Putting out those little, grills and stuff does not get you higher rents. That's where the retention comes in.
Exactly.
But I just want you to think about that. In the industry, just so you know, turnover is typically about 50%. At Lifestyle, it's just a lot lower because we learned the most important thing in marriage. What is that? It's cheaper to keep her. Make sense? So if we can get them to stay, we can raise the rents, and they appreciate that. So it's a model of best product, best price. I heard Janine saying it all the whole entire night. If we are not slumlords here, we make everything beautiful,
Yeah.
and it is about retention. It's a huge part.
And the other thing that leads to your success is the last point. I'm
Yeah.
sure you're having regular meetings.
Yep.
There's metrics that need to be followed.
Yep.
Things need to be measured. It's not hands off. Janine's not out there swinging hammers and nailing and working with the maintenance guys on plumbing issues, but she certainly has all the pieces in place to know what's going on and tracking it and the
Yeah.
things that we're working on the property.
Yes, we have very specific goals. We have a weekly meeting with our staff, and sometimes it's over the phone and sometimes it's there. I mean, the property is very stable, but making sure we track and measure our progress is very important.
So, what
It's
are you
changed
doing?
our life massively. I mean, it really.
Well,
really
you and
has.
Andre are retired. This
Yes.
is full time for you
This
now.
is
You're dedicated to
full-time.
this.
Yes, yes. We each have our roles in the business. It allows us to set our own schedule. We don't have to drop our kids off at, 6:59 when they open.
Yeah.
We can drop our kids off at school at, a normal time. We can pick them up at 3. I can put dinner on the table every night. And sometimes I work in the evening, and I feel like it's a blessing that I have the opportunity to be able to do that. Vacations, traveling is really important to us, and we do a lot more of it now. It allows us to work with my parents, and which has been a really amazing experience. I mean, we learned so much from them.
Yeah, very good. That's
Janine, really quick, because the same question I asked Roger earlier when he
Yeah.
presented.
Yeah.
Remember back when you first came to my seminar a couple of years back?
Yes.
And your parents were bugging you the whole time asking
Right.
questions?
Yeah.
What advice would you give to new people who are just
Yeah.
getting into this? Maybe they're thinking about doing apartments. What advice would you give
Yeah.
to new people?
I would say just go to as many events as you can. You're going to be uncomfortable. It's normal to be a little bit uncomfortable, but don't wait too long. The faster you start, the faster you're going to start progressing, and it's baby steps. It's baby steps.
Cool.
You'll meet a lot of, so my last point on here, education and new like-minded friends. This is really important. This is something that this community we have made some really good friends here. And when things come up, sure, I know I can always call Doug. I know I can. And, I do call him when there's an issue. But sometimes I just call somebody else who does the same thing I do. Hey, have you ever had this happen? What'd you do about it? And sometimes, yeah, they've had that situation, and sometimes they haven't. And if they haven't, they'll say, oh, but I think so-and-so did. And, it's a very tight-knit community.
So those of you that are considering passive investing, we have lead meetings that we hold with all of our leads prior to case studies. So we have these brainstorming sessions. Isn't it nice for you that are passive investors know that we have a whole networking group of people that can share experiences, share ideas on a whole host of different levels, and we all learn from one another. So it's just not me, but we have a whole group of people that we can learn from, and you've taken advantage of that, and it's paid off for you. So
Yeah.
very good. I know you got some things that you've got planned for the future. I know you're involved in some operations on other properties as well
Yep.
as your own.
Yep,
And so
that's how I
I'm sure
learned.
you're going to take it to the next level. And what might that look like?
Yeah. Well, we're going to continue purchasing multifamily properties and also investing passively. We actually closed on another deal a couple days ago.
Cool.
Just about 10 minutes from Arbor Trails. So we're really excited about that and digging right in.
How big's that one?
It's 111 units.
Okay, cool.
It's actually 113 with 2 down units. So It might
You
be
see how
more.
excited she is? These type B analytic with,
They're
yay,
using a unit
another
as the
$10 million.
office, and there's another plate. Yeah, I know, it's gonna be so exciting.
There you go. See, there's a little bit of excitement there.
Pee in your pants exciting.
There you go. That's what I want to hear.
It has a caboose.
Wait, we can't talk about Dunks up here. What do you mean a caboose? They're your father. Come on. Tell us about the caboose.
It has a railway car, like a train car on the property. So yeah, we're probably going to move the office that's taking up a unit that could easily be rented.
Interesting. That's an
Yeah.
interesting concept.
Yeah.
Cool.
Who's
So
on
I know,
my team?
Yeah, I know that there's
Yep.
a lot of people that have been here.
Yeah.
I want all of you to know that we have a whole vendor team of people that can help. You know, myself, Robert Hale, all of our national mentors, all across the country. Our leads, whether it's Janine, she has access to all of them to help her on any issues or questions or support that she might need to have. Plus all the people that helped her get this deal done. You know, whether it's legal people, whether it's CPAs, whether it's contractors, all here to help her out. And of course, she's got other investors that she can talk with, and not to mention her family, who's been a big support for her as well. So I want to make sure we call that one out too. So very good. Janine, thank you very much.
Yeah.
It's remarkable that, you know, in a year's time, you've got a property that was acquired at $10.2 million, today worth 12.6, and based on the targets and everything you're doing, you're potentially on the roll for a 16 million plus at the end of 3 years. How'd I miss that opportunity? Very good. So I guess with that, we've got questions that we're open for. Let's start with our in-person group here, if we can have any.
Okay, so who did your asset management and property management? You manage it yourself?
Yes.
So the question is, how are you managing the property and the asset management?
We have a management company, so we owner manage.
They do not third party it out to anybody else. It's their own company, their own staff, their own employees, have their own manuals, all that. So it's their company.
Yep.
Yeah, sure.
With passives, paying $25,000 into it as an initial investment, what was their quarterly dividend?
Yeah, so wanting to know if they were a $25,000 investor, their rate of return. We showed you earlier in year one, they paid 6%. So if you were a $25,000 investor, you would have had a 6% annualized rate of return each quarter. They're now into their second year that's paying 9% on an annualized rate and projected at year 3 at 11%.
And then on top of that, you're going to, if they sold, let's just say they sold, you're going to get, what, 130% return?
So 156%. So after year 3, between the equity upon sale of the property plus the combined cash on cash paid over that 3 years would be 156% above your original $25,000 investment, if that would have been the amount.
So like 40K plus your 25K. Would you be okay with that? Yeah. Is that better than your crappy stock market return? Probably, right? And how much work did you do? By the way, Janine, how much work did all your passives do so far?
They don't do anything.
They don't do anything.
No.
You just got to check. Am I right? Oh, that was horrible. Ooh, that looks bad. Oh, that
They
looks,
do
where's my
write
check?
some really nice emails sometimes.
Yeah, they write nice emails. There you go.
Yes.
Do we have a few more? We have one right over here, Joey.
So as a lead investor, about how much time would you say on a weekly basis that it takes you to do what you did?
All
Great
right, for
question.
those of
Achieve
that
this
that are online, how much time do you invest at the property on a weekly basis?
At the property, not very much on a stabilized property. So at Arbor Trails, I go once a week usually. for a couple of hours. There's, of course, work that I do from home and that Andre does from home.
Who'd be okay with a couple hours a week? Now, when
We're not running, we have a full staff at the property. We have an assistant manager, we have maintenance, we have a kind of a manager who oversees all of the properties.
Now here, there's one step further. When she first took over the property,
Yes.
that's when she was there all the
Yes.
time. But now that it's stabilized, now she can go to her next deal, work on that one, get that one up and running. So
Yeah.
there's different
Yes.
stages.
Yeah.
As a lead
So-
investor, as you know, there was $700,000 in capital improvements that were being put into the property. That's going to require a little bit more time up front. You're negotiating with contractors. There's vendors that you're dealing with. You have to be at the property to ensure that that progress and the expectations, the scope of work is getting done to your satisfaction. So yes.
Yeah, and we're really big at the beginning in completing the rehab, the initial rehab, really as quickly as possible. So we had all this initial rehab done. All the exterior improvements was done within 6 months. I mean, we really like to get it done quickly.
Now, I want you to think about it, because some of you might think about having a career as a lead investor. Who likes that idea? Putting deals, it's great, you can make a career of this. So what is my job? I will ruin your career, and you'll all end up in rehab like her. Just don't tell your friends you're in rehab. It just doesn't work out.
How did you find this deal?
The question was, how did you find
That's a
this
really
deal?
good question. So I think we got a good deal on this deal because of how we found it. So Carolyn Putney
And just so you know, full disclosure, she is a lifestyles realtor.
Yeah, she's a lifestyles realtor. And she had been working with me on another deal we were really close to getting to contract on it. And then we lost the deal at the last minute. Someone bid just a little bit, offered just a little bit higher. We lost
Some
the deal.
communist from California.
Yeah, exactly. And so then but I had really gotten to know her, and she said, you know what, that's it, Janine, we're going to find you another deal. And then this deal came up, and it had been under contract before, and the buyer had backed out, and they were eager to sell it. The seller was very motivated to sell. He lived out of the country. But it was kind of a little messy.
Yeah.
But we ended up, getting a great deal.
Isn't
on
it awesome to have relationships like that?
And she was really helpful. I mean, it was so nice to have her on our team for this deal,
Because she's
especially.
an investor herself, she knows
Yeah.
the lifestyles model,
Yeah,
so
she knows what's going
exactly
on.
what she wants. Yeah.
Yeah.
Great.
I do have one question online. It looks
Okay.
like the last one we'll probably have. It's from Scott, and he said, Janine, what is your biggest hurdle on this property?
What was your biggest hurdle, Janine?
The trash. I mean, really, I was already the operations lead on 2 deals for my parents in Austin. And so I had done all the rehab. I mean, I had basically done everything except put a deal together. I knew how to run a property, how to do the rehab, everything, all that. But the trash was difficult because it took a lot of
Coordination.
a lot of coordination, yeah. And the city had a real problem with it. So it wasn't that I was going over there picking up the trash every day. Don't get me wrong, but it was reminding the staff that the
Yep.
trash had to be taken care of all the time.
You had to
Every
train
day it was
people. Yeah, you had to
basically
retrain
a
them, yeah.
daily thing. Yeah, and then it was the follow-up.
And then the city wants to give you
follow-up.
fines and all
Yeah.
that. So yes, there's headaches, but who dealt with all the headaches?
Yeah.
Her. What about her investors? Oh, that's horrible. Oh, where's my check? Remember the difference.
This has been such a great property, you
Yeah.
guys. It has been really, really, really great.
You know what makes it really great? 100% return. That makes it really great. Give her a hand. That's awesome.